Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a great day wherever you are, and the world remains a very challenging place indeed. I've got a few new ideas for you. One would be, you may have heard it before, but it does look like Russia is building for another much larger and more significant military operation than occurred earlier in the year in the November-December period. So unfortunately, we could see an intensification of war over that period, and we are by no means out of the woods on that front. In fact, a couple of nations in Europe are recommending to their citizens to go out and buy iodine tablets to stock up. And of course, why? Well, they're a little bit helpful in the event of radiation fallout. Now, that's just a cautionary action, but we are at that point where people have to begin to monitor what they are doing with the possibility of that kind of risk scenario not being science fiction, but very much, unfortunately, starting to sort of appear on the horizon. So let's hope it doesn't come to that, but I do see a massive conventional warfare increase in the Ukraine theatre over the next 1 to 2 months. That will not be good for financial markets at all. Financial markets at the moment are trying to pretend that all of this won't happen, everything's going to be okay, and eventually the Ukraine war, like everything else, will just simply evaporate like COVID and go away. No, it's an entirely different thing, unfortunately, and as I said very early on, at first I thought it would be a 2 to 3 week thing, and I got that completely wrong, as a lot of other strategists did. But then I quickly shifted to, no, this will go into 23, and the risk is it's ongoing into 24 as well. So, no short turnarounds there, unfortunately, and we all pray that there is. At some point, perhaps, some renewed peace talk efforts. Doesn't look obvious at the moment. So, I think on that basis, one of the ideas I would offer up to you is that oil is still a buy on the basis that that sort of scenario is not at all priced into oil at this point. People have tried to look across the valley, and therefore they've sold oil, and the global growth story will get worse. Yes, global growth story will get worse. And remember, I've probably been one of the first economists in the world to forecast the middle of last year that the US would be having a recession this year. And there would be a global slowdown, and that was before the Ukraine war came about. So it's not all about driven by the Ukraine war. So the world is having a hangover effect from the party of stimulus and low interest rates. That's what's going on, plus the uncertainty of the war. So still very bearish, the global economic outlook, but I do feel that the oil market has priced too much of that in to its current levels, and that should there be an increase in conflict, then oil will move rapidly higher. Now, the other surprise scenario I have for you is, remember we called the bubble in stocks. How well did we call that? We didn't get oil and gold right over the last couple of months. Apologies for that. We got the US dollar huge uptrend, the Aussie dollar bubble and the euro bubble. We got that, and sterling bubbles. We got all of those extremely correct and have done very well, being bearish the Australian dollar since 77.45 all the way down, forecasting 70 cents at that level. Then it's 72, forecasting 65. And then it's 70 cents, forecasting risk to 58. Now, I expect the Australian dollar will bottom somewhere in the 62 to 58 cent range, maybe 57, somewhere in that area. My new idea for you, though, is that the US dollar is now in the process of becoming one tremendous historic bubble market. That's right. The US dollar is the next big bubble trade. However, we may, and I expect we are not yet at the zenith of that bubble, and that, dollar yen 150, but maybe it goes to 165. But we start to hunt now for signs of a US dollar turnaround to the downside. For the moment, though, there's just going to be, as the war intensifies, there's just going to be an increased safe haven flow, particularly out of European funds into US assets. So that will be a lot of buying of US dollars, and that will be a lot of buying of US stocks, would you believe? So the US stock market could be supported by some safe haven flows. So the US stock market could be supported out of fear, not greed. Keep an eye on that. I am not bullish or see any support, though, for the European stock market. I think the European stock market is in some kind of delusional state of just not wanting to see that things could even deteriorate further with regard to Russia and Ukraine. So let's hope it doesn't, but it does look likely that that could be the case. Remember, before the invasion of Ukraine, when everyone thought Russia wouldn't invade, several weeks before, I wrote an article, it's still published on the website, I believe, saying 5 reasons Russia will invade. So we did forecast that Russia would invade. Doesn't mean we wanted Russia to invade. We just took analysis of their perspective and decided it is something they probably will do if Ukraine persists in wanting to join NATO. So it doesn't matter whether it's right or wrong. It's just forecasting what's going to happen. That's what we're trying to do for you. So it does matter whether it's right or wrong, but the forecast isn't our view on things. So it's our view on how things will evolve, not wishful thinking, which is why I think equity markets currently are having a false belief rally, and the US dollar will experience a lot more buying. But why I think it's a bubble is that at some point, the US economy is already in recession. I believe it can go into depression. And one of the reasons for that is because you still have the President of the United States walking around saying the US economy is the strongest economy in the world. I don't know. I don't know what data he's looking at. And you still have the Chairman of the Federal Reserve saying the US economy is incredibly strong and can absorb much higher interest rates. Again, I'm not sure what they're having in their Wheaties in the mornings. So none of that is true. So why that is dangerous is it means that there's not going to be any policy response anytime soon to a deteriorating US economy, to a deteriorating global economy. And while we're on that front, the delay in the economic data coming out, GDP data coming out of China, is most likely because it isn't a good number and they don't want to release it during the Party Congress. Now, China's very good with its statistics. I'm a big supporter of the Chinese being meticulous about the numbers. So why are they delaying? They're delaying, it could be for a host of reasons, but juggle a few balls. I would think the most likely reason is out of respect for the Party Congress, and the delay also tends to lean towards my forecast that it could be another negative number for Q3 GDP in China, which would mean that China is in recession with the USA, which means the world's 2 largest economies are in recession. How is that good as a global investment backdrop? It's not. So I do think treat the current rally in stocks with a big grain of salt, which means rather cautiously. Respect it though, because there are large forces at play here in terms of different fund flows, etc. And it's not so much about the fundamental news on the day as to which way the stock market goes. It's more about which big funds were bearish or bullish on the day. That's the reason the stock market has these big swings daily at the moment, not necessarily because of any economic data. I note that US home builders confidence is continuing to collapse for the last 10 months now and is still collapsing. There's a little bit of fillip up in industrial output for USA yesterday, but really industrial output in the USA has only grown about 0.2% over the last 5 months, so it's nothing too exciting at all. So I'm still very negative of the US economy. I think the US dollar is beginning to go into bubble mode. Up until now, I thought it was reasonable value. It's going into bubble mode. Where does that bubble explode? Maybe it explodes at 88 cents euro, 84 cents euro. Maybe it explodes right now. Maybe it explodes for the Aussie right now, but maybe it explodes close to 58 cents. But we will be watching for that. I hope that helps. But for the moment, I'm still a buyer of US dollars, buyer of oil. Here, I see value in oil here. And I am, of course, a seller of the currencies against buying the US dollar. I'm looking a little bit at the Singapore dollar. I think if it the US dollar, Singapore starts to break lower, that could be a good trade. I do see Asia is faring better than Europe or the United States, obviously, over the next 1 to 3 years. So at some point, those currencies could separate from the general loss of, say, the Australian dollar, the Canadian dollar, and the euro and sterling against the US dollar. Asian currencies should develop a life of their own at some point and be a little bit stronger than the rest. So I'm keeping an eye on the Singapore dollar in that regard. Yep, so for the moment, still buying US dollars, but watching for a bubble. Hope that helps. Have a great day. Clifford Bennett.